This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily for this Wednesday hump day. We're halfway there, kind of.
Yeah, we got 3 hours to go to really be, well, like 90 minutes to go. But who's counting?
Yeah, well, we are, because we want to count you down to the closing bell on this Wednesday. Having said that, we're also closing you or counting you down to a bunch of earnings that are coming after the closing bell. Having said that, ahead of it, we've got a market where there's some pressure. Certainly on the tech trade, it is down. The Nasdaq 100 down about 520 points. So we're seeing certainly some pressure there, down 2%. And we're looking at a decline of about 0.7% on the S&P 500. We're going to talk about the trade, kind of talk about the massive backdrop that is constantly facing investors.
Yeah, Charlie's going to have more in just a minute on the trade. But if you look at the NASDAQ 100, it's its worst day going back to October 10th, 2025. As of right now, that's when the NASDAQ 100 dropped more than 3.4%. In terms of what's actually moving and what's dragging down, AMD is down 17%, AppLovin down 16%, Palantir down 13%, Micron down 13%. Just a few of the names that are dragging the index lower.
I'm looking at shares of Alphabet, folks. They're down about 2.3% ahead of earnings. That will be the big release after the closing bell. So we're going to talk about that. We're going to talk about tech results overall. We're also going to get into geopolitics. So the global backdrop as China's President Xi exchanges calls with President Trump and President Putin of Russia. There's a lot going on when it comes to China. And then you've got the domestic agenda as well, as the Department of Homeland Security pulling a bunch, hundreds of agents from Minneapolis. So we are going to go macro with Sarah Hunt, Chief Market Strategist over at Alpine, Saxon Woods, but we'll also get updates on both those global stories and domestic stories.
Yeah, speaking domestically, one person we like to check in on what the domestic economy looks like is Frank Sorrentino, CEO of ConnectOne Bank, fresh off of earnings. He's going to be joining us in just a few minutes.
Just sharing some time with him in the makeup room.
Okay, he's here.
He didn't
he's
need
ready.
Anything, but I did. Yes, he is. Looking forward to that. And Michael Burry, the gold trade and Bitcoin. This is among our most read stories. We teased it. We talked about it a little bit late yesterday. We're going to get into all of that with Axel Merk.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie.
Thank you very much, Tim and Carol. Since our last update, the Dow has turned around, now positive on the day. Do want to begin, though, with a decision from the U.S. Supreme Court allowing a new California voting map for those midterms. S&P down 52, drop there of just about 0.8%. We've got the Dow up 17. That is a gain of under 0.1%. NASDAQ lower by 1.8%, and the NASDAQ 100 index, that is falling now by just about 2.1%. The 10-year, 4.26%, with the 2-year currently yielding 3.55%. Spot gold down $17 the ounce. Spot gold down 0.4%. 49.27 the ounce. Silver up 1.2%, just above $86 the ounce. West Texas Intermediate crude up 2.8%, $64.96 a barrel, and Bitcoin now down by 3.4%, 73,600 on Bitcoin. The January employment report rescheduled for February 11th, according to the Bureau of Labor Statistics. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, so appreciate that. All right, we're going to start global and kind of drill down on this Wednesday. First up, President Trump out on social at around 10:40 a.m. this morning saying he, quote, just completed an excellent telephone conversation with President Xi of China. Long and thorough, he said the call was. He said they talked about a lot of different things. They discussed trade, they discussed military, they discussed the upcoming April trip that the president will be making to China. This is, again, what President Trump said on social earlier today. He also said they talked about Taiwan, the war between Russia, Ukraine, Iran, Chinese consideration of purchase of more agricultural products. So a lot going on there. That was earlier today.
Okay, then China's President Xi has also been talking with Russian President Vladimir Putin. A video call marking their first direct talks of the year. They praised ties between their countries as, quote, exemplary. The two leaders discussed various topics, including the Kremlin's war in Ukraine, increasing tension between the U.S. and Iran. Putin also accepted Xi's invitation to visit China in the first half of the year.
Okay, there's a lot. China is out and about, no doubt about it. We've seen that a lot already. Hey, with more on what it feels like increasingly the New World Order, something we talked about even at the end of last year, Bloomberg Economics Chief Geoeconomics Analyst Jenny Welch. She is with us from the Bloomberg Washington, D.C. Bureau. Jenny, great to have you back with us. All right, first up, the call between President Trump and President Xi this morning. Expected, important, why did it happen now? What do we need to know?
So a lot of details are still to come out about why this call happened and what exactly they discussed. But historically, the U.S. has been the one to initiate and propose these calls. There's nothing that seems immediately urgent from the call readout that we received from President Trump. But what I would hazard a guess is the call is largely about Iran, or maybe driven by events in Iran. That President Trump was, for example, trying to press China to do more to drive Tehran to the negotiating table, to limit its purchase of Iranian oil. And she was probably taking the opportunity to raise concerns about U.S. actions in the region that could put those oil flows it so heavily depends on at risk.
Well, we're just getting a headline now. The president says Iran's supreme leader should be very worried now. The president also actually weighing in some stuff about the Fed, but we'll save that for a little bit later. The president, though, saying Iran's supreme leader should be very worried right now. How does that fit in to the China equation, Jenny? How does that fit into this new sort of not new, but new-ish alliance that the president is trying to kind of disentangle?
So I think what President Trump is aiming for, and he talks about this when he talks about Xi as well as President Putin, he sees these two as great powers, and he tries to treat them with respect and, at least acknowledge, as he would put it, their concerns in other areas. And so, especially with China, we've heard him reference this G2 concept. And what we think he means by that is trying to work with China to deal with some of these larger international issues like Russia, Ukraine, like Iran. I think from Beijing's perspective, it's not interested in playing that sort of role with Washington, whether it's on Russia, which it sees as its strategic partner. It's not going to try and push it to the negotiating table on Ukraine, or with Iran, where Iran is a major source of oil for China. More broadly, China is extremely dependent on the Middle East for energy. It doesn't want to see instability there. It doesn't want to see conflict that could put those energy supplies at risk and its broader economy as a result at risk.
I got to say, it always makes me think about, Jenny, what is China's role in this world? Are they becoming more powerful, more significant allies that maybe were normally of the U.S.? Are they increasingly looking at China? Help me put it in context. What has really changed? Because at the same time, we had a story about the EU is going to pitch the U.S. on a critical minerals partnership to curb China's influence, looking to shape the Trump administration's push to strike global agreements this week. There's a lot going on globally. So, there's a lot you have to take it together. So what is the pecking order, and where is the U.S. and China in all of this?
So I think Beijing certainly sees itself as having a unique moment of opportunity now, in large part in reflection of U.S. policies globally, and especially as it relates to U.S. allies and partners, right? For example, Beijing looks at U.S. tensions with Europe over Greenland as a huge moment of opportunity for it to try and strengthen its ties with Europe, or take advantage of that moment, drive a wedge between them. At the same time, I think there's a larger debate happening about what is the role of the United States in the world. Does it still want to kind of be the linchpin in global order that it has been? Does it have the capacity to serve that role anymore? And I think even in Washington, there's questions about that and questions about trade-offs. And that's reflected in the Trump administration's national security strategy, where they talk about refocusing in on the Western Hemisphere and sort of shepherding or stewarding U.S. resources more carefully in recognition that the United States cannot play the same global role that it used to play anymore. On your point about critical minerals, yeah, all this is happening at a time in which the United States is taking a number of major actions on critical minerals,
right.
And yet that didn't seem to come up in the call with Xi Jinping, even though all those moves are aimed at reducing U.S. reliance on China, and by extension, U.S. ally and partner reliance on China.
I feel like we're playing the game of Risk, and there's a lot at stake here. If anybody remembers that game, my brothers played
still
it big
around.
time. It is still around, right? But it feels like that's what's going on, and things are shifting. Jenny, always getting us up to speed. Jenny Welch, she's Chief Geoeconomics Analyst at Bloomberg Economics, joining us from our news bureau in the nation's capital. Tim.
Well, from the global agenda to the U.S. domestic agenda, the Department of Homeland Security revising its approach to Minneapolis to ease tensions after federal agents killed 2 U.S. citizens. White House Borders are Tom Homan. President Trump, a reminder sent to Minneapolis as part of an effort to de-escalate tensions. He spoke about this morning from Minneapolis.
And as a result of the need for less law enforcement officers to do this work in a safer environment, I have announced effective immediately, we will draw down 700 people effective today. 700 law enforcement personnel.
That was Tom Homan earlier today, Border Czar. With an update, we head to City Hall here in New York City and to Bloomberg News senior reporter who covers Homeland Security, Myles Miller. Myles, 700 out. It's not all of them, but effective immediately. Why this change right now?
Yeah, after the two shootings that resulted in deaths of two people who were observers, protesters in Minneapolis, the Trump administration sent in Tom Homan to basically rethink their strategy as it relates to immigration enforcement in Minneapolis, right? Let's go back to how this all started. This began with an investigation into what the administration said was fraud in Minneapolis. And then what did that turn into? That turned into basically an operation that was moving away from targeted enforcement. And what it looked like was being on the streets of Minneapolis, St. Paul, the Twin Cities area, and asking people for their citizenship documents. Tom Homan came in and within a week was able to work with local officials to get access to jails and to do more targeted enforcement. So what does this look like? 25% of the people who were sent there will be returning to wherever they worked previously. That leaves about 2,000 officers right there in Minneapolis. But Tom Homan says it's a new strategy, working with the governor, working with the mayor in Minneapolis to make sure that they're doing targeted enforcement and that, they are working with local law enforcement to make sure that their efforts, go on unscathed. I think these two deaths really sort of shocked the White House and also shocked folks who sent them in for this operation.
All right, Myles, thank you so much. Bloomberg News senior reporter covering Homeland Security, Myles Miller. All right, again, we remind you there is so much impacting investors, global domestic issues, all factor into the investment environment. And this is kind of happening on a day when Alphabet, it's a more than $4 trillion company. It's the third biggest market cap company behind NVIDIA and Apple. I had to kind of check today. Alphabet reporting after the close today. Let's get more, though, on the macro and the investment environment. Back with us is Sarah Hunt. She is partner and chief market strategist at the independent asset management firm Alpine, Saxon Woods. They've got about $850 million in assets under management. She joins us back in studio. How are you?
I'm doing okay.
Are you surviving January or now February of 2026?
Well, to be fair, we had sort of thought that there would be more volatility coming into this year, partially on the back of the fact that you had 3 good years in a row. There was a lot going on. There's a lot of shifts that are happening. But out of the gate, we seem to be having a lot more volatility than I think people were necessarily looking for.
You guys put some research on the website. It was mid-January entitled Markets March On, But Risks Linger. So what risks concern you the most? I mean, we just laid out some global issues, also domestic issues, which hopefully are de-escalating, but there are still issues out there.
There's a lot going on the global front. There's a lot going on the investment front. I think that right now we still think that earnings are the most important thing, and the fact that Google is reporting tonight is that's going to be an important bellwether because you've seen some mixed results from companies, and even companies with good numbers. If you're not giving fantastic guidance going forward, or people looking for very strong numbers going forward, there's a lot of easy disappointments that seem to be happening here. So I think that is telling you that the market was coming into all of this on fairly high levels and had a lot of expectations. And even if you're meeting some of those, it's not good enough in an environment where people are starting to get scared again about what is going to get disrupted by AI and how badly and how fast.
Okay, so I'm really glad you went there because that's exactly where I want to go. We're seeing another day of selling when it comes to software stocks, ad agencies, investment firms. They're all caught in a wave of selling. Investors are concerned about the business risks they face from better AI tools. What sticks and what doesn't? I think a lot of people are scratching their heads right now thinking, okay, wait a second, if we're in the midst of a new industrial revolution, what is the actual effect going to be on these companies that have just dominated the space for a decade?
I think this is the biggest concern, because in the same way that when people started talking about, oh, the internet's going to do this and the internet's going to do that, it was unclear who was going to win and who was going to lose. And there were a lot of companies that came out of the gate that looked like they were going to win, and in the end, not everybody shook out the way you thought it would. I think the problem right now is that the fear piece is very high, and the understanding of where that's going to go is not very strong. And I can understand why there's a concern about data companies and about software, but it's not like we're going to take Microsoft out of every computer because there's other ways of writing software. Like, there's a lot of embedded stuff that is not going to be disintermediated.
But it doesn't
in that
seem like
way.
people are concerned about Microsoft. They're concerned about the Salesforces of the world. They're concerned about the software as a service companies that sell a certain number of seats. And if you don't need as many of those seats, and those companies are facing challenges.
I think the concern is both the growth and the repeatability of those cash flows, and that's what seems to be the problem. But at the same time, there's a huge ecosystem around a lot of those softwares, and it's not so simple to say we're just going to pull this out or this is going to be changed in this way. I think the question really is, they were demonstrating fantastic moats, fantastic growth. What if those things are not as strong as we thought they were? And I think that you're getting some knee-jerk reactions to, let's sell everything across the board. I can understand on the data side, it's a lot easier to find data that it used to be difficult to find. So there are some concerns there. Whether or not that ends up over toppling the business model is not yet clear, but I think that the fear starts and it kind of feeds on itself.
All right, so chalk went up for the short sellers, right, who have made some money on this play. We talked with our own Mandeep Singh of our Bloomberg Intelligence team, who said this is in many ways a valuation play, and we have yet to figure out how much disruption to these software guys, and we're going to see some change in companies. I wanted to go back to, is it fair, Sarah, in terms of the AI disruption, that it is akin to what we saw with the internet disruption? Is it apples to apples?
I don't think anything is apples to apples, and I think that that's the hardest thing, because everybody wants to go back in history and say, okay, I can find a playbook where I can understand that if this is happening to this industry, this is the logical conclusion. The problem is that we don't know what the answer to that is, and to a large extent, it's so fascinating to play with AI, because you can ask it all these questions and get this data back in a way that we weren't used to having. A lot of that data isn't the best data in the world. You may not want the free version of a lot of things. And so the question of what we're paying for and how and who has proprietary data is a whole big question that's unclear.
How are you guys using it?
We use it in a lot of different ways. It can do a lot of early research for you. You can ask it questions about what has been the earnings trend of this company, what's wrong, what are the biggest fears that people see to this company, what are the greatest advantages that people see. But you have to then go back and look at that source material and sort of figure out whether or not what the information that you're getting makes sense. Because it's great to say, I can get all this information. You still have to weed through it. It's just you're gathering it faster and in ways that you weren't doing it before. It's sort of like when Edgar went online and all of a sudden you could go through 10K filings online. You didn't have to wait for the mail to get there. I mean, there's all these things are iterative, and it's hard to see exactly how that's going to change everybody's business process.
So for you, is it increasing productivity?
It makes it much easier to weed something out or in the early stages and say, I'm looking for X or Y, and figure out some of that information, because it'll pull information from a lot of different sources. I'm using it on Bloomberg, right? Because Bloomberg has to ask Bloomberg. And so it comes back with a lot of good stuff, and then you can go to that source material, and I find that helpful.
Number one risk, you think, at this moment in time for 2026? Just got about 20 seconds, 25.
I think for markets, it's going to be earnings, because if it looks like the earnings are turning down, or if it looks like that delta is changing, I mean, I think that's actually the biggest problem.
Earnings or revenues or both?
You
care about
both? It's both, but it depends on which direction and how fast. I mean, part of the Microsoft problem was a little bit of a change in growth. It wasn't that big of a change, but anything that's negative, the delta's going negative, is a problem. And I think that is where 2026 is going to be challenged.
Hallelujah. Great stuff. And I know we'll be talking with you throughout the year. Sarah, thank you. Sarah Hunt, she's partner and chief market strategist over at Alpine, Saxon Woods.
Oh, that was good. Coming up next, Frank Sorrentino joins us. Going to give us a check not just on ConnectOne Bank, but also the health of the U.S. economy. That's next on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher now, advancing by 84 points. That's a gain of 0.2%, reversing earlier losses. S&P, though, remains in the red, down 50 points at 68.66 on the S&P. That is a drop there of 0.7%. NASDAQ, meanwhile, down 1.9%. The NASDAQ 100 index down 2.1%, with the Russell 2000 index down by 1.8%. Traders keep driving a rotation out of tech giants. The 10-year, 4.27%, with the 2-year right now at 3.55%. Spot gold now down $21 the ounce to $49.25. Spot gold down 0.4%. But silver is up 1.5%, now at $86.42 on silver, while West Texas Intermediate crude $65.26 a barrel, WTI up by 3.2%. And Bitcoin down $3,100, down 4.1%. Bitcoin just above $73,000. Coming up after the close of trading, we'll be getting earnings out of Alphabet, Qualcomm, and Snap. Speaking of earnings, Uber gave a weak profit outlook and promoted an outspoken driverless vehicle bull to be its new chief financial officer, signaling further investment in a closely watched area of the ride-hailing company's business. Uber shares today after earnings, they're down almost 5%. Based in San Francisco, crosstown rival Lyft trading lower by 4.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, folks, we did have some news in the banking sector. In fact, in a Bloomberg exclusive, Banco Santander has agreed to acquire Webster Financial. It's a $12 billion deal that will allow Spain's largest bank to make quite a bit on the United States. Pretty big. Our next guest is already betting on the U.S., has been for a while. We were talking about ConnectOne Bancorp, which reported earnings last week. Stock is trading up about 1.6% today, up about 5% in the past 3 trading sessions. And I should point out that Keefe, Bruyette & Woods raising its price target on the stock to $32 a share. That, Tim, happening on Friday.
Great to have back with us Frank Sorrentino. He's founder, chairman, and CEO of the New Jersey-based ConnectOne Bank. He has a $1.4 billion market cap, up close to 7% so far this year. Welcome back. How are you?
I'm doing great. 26 is a great year ahead of us. I really believe. A lot of people said, survive till 25. Well, here we are. It's 2026, and things are looking really up. So very confident about what's happening.
Well, as Carol mentioned, it's not just that you guys betting on the U.S. Spain's largest bank betting big on the U.S. We already have foreign banks here. What's your view on the deal? What's the competitive landscape for the U.S. and like for business?
Look, there's a lot of consolidation going on in the U.S. markets for financial institutions. The United States is a sort of a rare breed across the globe where we have some 4,300 banks today, which you don't find in most countries. And so there's a natural consolidation going on. We have a very, very accommodative administration and regulatory agencies that are allowing for some of those M&A activities to take place. And, notwithstanding what everyone would like to say about the U.S. and all the headlines and whatnot, there's a lot of foreign capital that wants to find its way into the United States. And so when you see a deal like this that you just announced, clearly that's foreign capital moving to make an investment here in the United States. For banks like ConnectOne that are in the market in the region that Webster was in or is in, we see that as a boon for us.
Why?
Well, anytime there's consolidation like that or a merger, clients get impacted. The ability to do certain types of loans may go away. Certain products get phased out or whatnot. There's a lot of turmoil in that wake, and so generally smaller banks are there to pick up the pieces. And so we're excited to see this transaction take place.
We've asked you in the past about M&A, mostly from the perspective of you going out and buying other banks. What about bigger banks coming knocking on your door? Does that happen?
Listen, it's always I've said to our investors, our everyone, where our job is to continue to make ourselves unavailable to be sold, but certainly that's always a possibility for every institution, and it should be for every company, right? It forces you to run your company in the best way possible, but certainly there's always that opportunity out there.
Did you say availability to be sold?
Always, every company should look at their business plan and their model, looking at what value. If you want to talk about a value of a company,
right?
The value is what someone's willing to pay you for it, right?
Right.
So how do you set the company up to be the most profitable, the best company in your market in the products that you provide? And if that's true, there'll always be someone interested in an acquisition.
But sometimes you have to spend money, right, to do a strategy that pays off longer term.
When I say profitable, it may not be financial profitability.
Okay.
Are we creating value?
Yeah.
And so, one of the things I'm the most proud of, we've been at ConnectOne 21 years with pretty much the same management team, and we've created an enormous amount of value over those 21 years, and no one's been able to buy us.
Not yet.
So, that's right.
But you're open to it.
As I said, I think everyone should be open to that.
We were talking with our team here.
By the way, you just saw it in the transaction with Welch there, right? That was a fantastic company, well-run, well-managed, great markets, and someone offered them, a price they just could not refuse.
I mean, what's fascinating, I think, around us, we used to have a bunch of retail, and then they left. And 2 banks have opened up. Citibank across from us is a Capital One. That's like downstairs. A cafe and so on and so forth. It's not retail that's coming in. I just feel like banks are popping up. I mean, banking has been a pretty good business for a while.
Yes.
Especially the last couple of years, it feels like.
And I think it will continue to be.
And is it because of the consolidation, or is it?
Well, that's part of it.
What is it that's really juicing it?
Look, part of it certainly, if you have less banks, it's you're going to first off, you're going to have bigger banks that have bigger balance sheets and the ability to provide better products and services, and that's more desirable. We're also seeing, at the ground floor, all of our clients are getting bigger and smarter and more sophisticated, and so they have needs for more financial products. So, not to dismiss, the small community bank that doesn't have a lot of that product and service set, but what we see here, certainly in the New York metro market, our clients are getting larger, they're getting bigger, they're entertaining M&A, and so they're leapfrogging in size. And so they need a bank that can continue to service their needs. And so part of our growth strategy, it's, we want to create value and we want to grow our earnings and all that other stuff. But I also recognize if we're not growing ConnectOne, we're not going to be able to satisfy our clients' needs as they're growing. And to me, that's an incredibly important part of our organization.
One of the reasons we like to talk to you is because you have a great view on small business, specifically on construction, on builders. That's sort of the DNA of your bank. You've been really consistently, quarter after quarter, at least with us, optimistic about that demographic that you serve. Does that optimism remain today?
Yeah, nothing's really changed in my view, and through the clientele that we have relative to when we talk specifically about construction and probably in multifamily and industrial warehouse and manufacturing in those areas. There's just not enough product on the market. And when it comes to, apartments and homes and condos, we are so woefully short, specifically here in the New York metro market, that I don't think you could build enough to satisfy that in any short period of time. So to say I'm optimistic would be an understatement.
Well, what do you make of the story? I mean, we were watching home builders on the move this week, and this is, was it Lennar, and I forget who else, that has apparently approached the administration about building affordable homes. They call them Trump homes, including private investors. It sounds like there's a lot of details to be worked out. I don't know. How are you viewing something like that? Does this kind of make sense as maybe a first step to figuring out a strategy, or does it? I don't know.
Yeah, so the answer is yes. It's a great idea to think about affordability first, relative to, new homes, home ownership.
And it's rent to buy, I think is the strategy.
Home ownership is great, all these other things. Yeah. But, the real impediment and the reason why we don't have enough homes today is not because of capital and it's not because of bank lending. There's political change that has sort of crept into the system. You just can't build. You have to, between environmental issues and the parochial town by town issues, zoning issues, insurance needs, whatever it is, creating this environment where it's just difficult to build. So. Unleash the ability for builders to build, and you'll have affordable housing.
Well, our producer Talia has got one eye on the show and one eye on what Bill Pulte's saying on Fox News right now, Fox Business. He's actually saying he's the head of Fannie and Freddie, not actively looking at the Trump homes idea. He's saying this on Fox Business as we speak. So
come and go pretty quickly.
Well, that's just one.
Yeah.
One voice there.
But an important one when it comes to certainly the housing market.
As you're talking about housing and you've got me thinking about infrastructure. And maybe it's because we're seeing this right now in the midst of a sort of unprecedented or historic freezing weather here in New York and challenges that are associated with that. But you've got a lot of big players betting big on infrastructure right now. Are you able to play in infrastructure at all?
Most of it's bigger than what we can manage, but I would agree that there is so much need for infrastructure build. You drive on any road, go across any bridge. It's really I use the subway often here in New York. I mean, there's clearly a need for infrastructure spending just about everywhere.
But it's right now that's a little too big of a swing.
Generally, those things are
Okay.
they're beyond our balance sheet capabilities.
We've been talking kind of macro and big.
But hold on, but however,
Yeah.
all of that infrastructure, I'm excited. That's part of my speech too. That all that infrastructure capital that's coming in, when they repave the turnpike or they build a new section to the subway or build any of these products. Think about it. They all need shovels. The workers all have to go to the deli.
Yeah.
They all need their clothes cleaned. They all need to buy shoes. And those are all the businesses that ConnectOne supports.
It's economic velocity,
infrastructure,
right?
Infrastructure spending is great for the economy.
All right. What about President Trump's new choice of a Fed chair? Will he be potentially great for the U.S. economy?
Look, he's an interesting choice based on what everyone expected. I think he's the exact opposite of what everyone expected would actually happen. And if you look at his history and what he's focused on, the thing that I like the most is that he is data driven. And I've said those words on this show often. I think the Fed needs to look at the data and make decisions about what they're going to do with our money supply. You've heard me speak many times on this show about that interest rates maybe aren't the most important thing we need to be focused on, but the Fed balance sheet is. And very few people want to talk about that. He wants to talk about that, and he is saying that Fed balance sheet is too big. It needs to be reined in. It is causing market distortions, and really interest rates can afford to be lower if we get the Fed balance sheet under control. And I happen to absolutely agree with that position.
Don't go. Can you just stick around? We got 2.5 hours to go. Always appreciate it. We get such a great view of what's going on. Glad you're optimistic. We could use some optimism, certainly here in 2026. Frank, thank you so much.
Always great to be here.
Always appreciate it. Frank Sorrentino, founder, chairman, and chief executive officer of ConnectOne Bancorp, joining us right here in studio. Hey, Bill Pulte also continuing in an interview on Fox, and he's saying Fannie Mae, Freddie Mac ready to go public. It is up to the president. He would sell 2.5% to 5% of Fannie Freddie if it goes public. There's a lot of debate about doing that as well.
In the meantime, I'm just taking a look at the S&P 500, down 0.5 percentage point. The NASDAQ Composite down 1.5%. In the S&P 500, you still have information technology as the laggard, down 1.9%. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Bill Pulte, director of the Federal Housing Finance Agency, says Fannie Mae and Freddie Mac are worth between $500 and $750 billion. In his view, Pulte making the remarks in an interview on Fox Business. Coming up after the close of trading today, we'll be hearing from Alphabet, Qualcomm, and Snap. We'll be all over those as they break. Today, we got Alphabet shares, part of a broader tech sell-off, down now by 2.2%. The Dow, though, does remain higher, up 146 points right now, with the Dow up 0.3%. S&P 500 index down 33 on the S&P, a drop right now of 0.5%. The Nasdaq Composite index down 160, a drop there of 1.5%. The NASDAQ 100 index down 1.7%. And the Russell 2000 index of small cap shares down now by 1.3%. The 10-year at 4.27%, with a 2-year 3.55%. Gold just about flat on the day, down under 0.1% right now. We've got spot gold $49.43 the ounce. Spot silver $86.72. Silver's rallying 1.8%. And West Texas Intermediate crude right around 65 a barrel, 64.85 right now. WTI up by 2.6%. A major sell-off underway from Bitcoin. Crypto falling. We've got Bitcoin down 3.8% right now at 73,220. Texas Instruments is buying U.S. chip firm Silicon Labs for about $7.5 billion. Texas Instruments down 1.4%, but Silicon Labs surging now by 48.8%. Recapping Alphabet after the close of trading, also Qualcomm after the close of trading. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Mr. Pellet. All right, we're going to stay in the markets a little bit. Gold dipping below $5,000 an ounce amid a lack of fresh catalysts to support the market following a historic price plunge late last week. Precious metal, though, is up nearly 13% year to date. And Tim, 56% gain last year alone.
49.42 for ounce of gold as we speak. Silver went into a bear market, dropping some 32% from Friday to Monday. Rallied yesterday, little changed today. Meantime, a Substack post from Michael Burry, who correctly called the 2008 housing crisis, is writing about Bitcoin and its impact on precious metals.
Man, we are like all over this and have lots of questions. Let's get to a view on the precious metals, gold and silver. Axel Merk is back with us. He's President and Chief Investment Officer of Merk Investments. They've got $4.4 billion in assets under management. Check this out, a little perspective. AUM 1 year ago, $1.8 billion. Axel joins us from Palo Alto, California. How are you? And Happy New Year. I don't think we've had a chance to speak. How are you?
Happy New Year. And just for the record, we also caution about the financial crisis. It wasn't just Michael.
You're right. Well, then you are the perfect person on many levels. But first, I want to ask you about AUM, because as we were prepping early this morning on our show call, your AUM has soared. Is that just because of the rise in gold prices, or is that about new investment money coming in? Because that's quite a jump in 1 year.
It's both. We have one product that's an open-end product. We've had inflows and the price of gold has appreciated substantially. The other one is a closed-end product and it's all internal performance. So both, it's just a sign of the environment that we're in, right? We've been talking about this, and views that have been on the fringes are moving more towards mainstream, and this market isn't so huge. And so you have some outsized returns.
How much, though, are the flows increasing? I'm curious, how much of it is flows? How much is it a price appreciation?
Much of it is appreciation.
Okay.
Very notable. We had some significant inflows at the end of last week when we had this downdraft. And this was one of the signs that the long-term investor considered this a buying opportunity. I'm not going to predict what the price of gold is going to do tomorrow, but we clearly had some outstanding returns on the upside, but there seem to be cooler heads in some places, and we tend to attract a more long-term investor. Let's keep that in mind as well. The speculators tend to go to other products.
So let's get to your warning and to Michael Burry's warning. The interesting part that we're pointing out from the Michael Burry piece on the Bloomberg terminal, he's warning that Bitcoin's plunge could deepen into a self-reinforcing, quote, death spiral, inflicting lasting damage on companies that have spent the past year stockpiling the token. He argues that Bitcoin has been exposed as a purely speculative asset, failing to take off as a debasement hedge similar to precious metals. He cited the fall in the crypto as particularly to blame for the recent collapse in gold and silver, as corporate treasurers and speculators needed to de-risk by selling profitable positions in tokenized gold and silver futures. Do you agree with that assessment and that connection between silver and gold and Bitcoin?
Well, some of it. Clearly, when, quote unquote, everything is levered and you have a deleveraging going on, quote unquote, everything is coming down. The one thing I framed Bitcoin as something that still wants to decide what it wants to be when it grows up. And part of the reason why I've said that is that unlike gold, crypto has consistently been highly correlated with risk asset, with the S&P 500. So when risk is off, when the S&P goes down, crypto goes down. Obviously not every day, but quite a bit consistently. Whereas precious metals have a long-term correlation of zero towards risk assets, correlation phases in and out. And so sure, in a downdraft, when there are speculators in gold or silver, it can be taken down. But I think gold has shown that it has a different dynamic. And so, but at the other end of the spectrum, sure, if Bitcoin continues to plunge, those who have levered up on crypto, including those special purpose companies, they can suffer disproportionately, to put it kindly.
But the impact on these tokenized gold and silver futures, I mean, a small role in the pullback, or is it just a case of gold and silver, Axel, running up so much, and so a pullback of some sorts was to be expected?
Well, when a product is based on derivatives, and a lot of attention has been focused on this Chinese silver ETF, the Chinese don't have many investment options, and so they tend to pile into a product. And when that product is based on derivatives, it's a recipe for disaster. In the US, we have margin requirements. They tend to increase when volatility goes up. That's a healthy mechanism for correction. Remember, the purpose of these rules, be that from the regulator, from exchange, is not to prevent you from making a stupid decision, but that your stupid decision doesn't wreck the system as a whole. And so I mention that because the fallout is limited if the system is well designed. Now, clearly on the crypto side, a lot of unregulated products, but we've seen a natural selection there. And so, yes, there may be some spillover because the speculator might be active in more than one area. And last year, speculators have kind of gotten back to precious metals where they used to be before they were meme stocks. But overall, I think we see it unfold here, right? There's increased volatility, but gold bounced back. We're just around 5,000. And so that's much healthier than on the crypto side where the animal spirits are the beginning and the end of everything.
So I'm a little biased toward crypto in this discussion. We'll get back to gold in a second, but you said that Bitcoin is still trying to figure out what it wants to be when it grows up. Is this proof that it is not digital gold?
Well, it's different. It's clearly different. I think there's amazing value in the underlying technology, but Bitcoin themselves remains to be seen. Now, clearly, I know all the arguments that are in favor of it. And at the end of the day, though, it is about mass psychology. And the track record of Bitcoin is just very short. And I'm not saying that the dynamics cannot change over time once it gets more mature. But for the time being, the jury is very clear that it is a risk asset, whereas gold is a defensive asset. And defensive has to be taken with a grain of salt, of course, because it's also very volatile. But the dynamics are very, very distinct. And as such, I think they attract different investors, but clearly there is this tension between the two groups, and it's good that there's a choice for investors ultimately, right?
So just 30 seconds left. You said you don't predict the price of gold tomorrow, but with a 65% increase last year, a 27% increase in 2024, a 13% increase in 2023, has it gotten ahead of itself?
Well, we have the king of debt as president. We have geopolitical tensions happening. We have a deficit that's not sustainable, and we have more and more people think about what they might be doing about it. And because that space is small, it's just very difficult to say what gold is going to do. And let's just say I'm very happy that I have substantial gold holdings. I bought them a long time ago, and I'm not too concerned about them.
All right. Great voice, always, on gold and more. Axel Merk, thank you so much. Axel Merk, President and Chief Investment Officer of Merk Investments, joining us from the West Coast. When we come back, check on the trading session and some of the stocks on the move. This is Bloomberg.